Now, Tesla shares closed at the lowest level in more than 3 months after the carmaker cautioned that supply chain disruptions have held back production capacity and will impact that pace of near-term output. The warning took some of the gloss from the record fourth quarter, which saw revenues rise 65% from last year to an all-time high of $17.72 billion, while gross automotive margins were pegged at a better-than-expected 29.2%. Wow, that's absolutely crazy. But everyone seems to be wondering why Tesla is crashing, yet the company posted impressive fourth quarter results. We're going to figure out why this has been happening to the EV giant, so stay tuned. So Tesla said a continuation of the global supply chain, transportation, labor, and other manufacturing challenges would limit its ability to run their factories at full capacity, although it noted that its original Fremont facility achieved a record production rate. Tesla CEO Elon Musk said annual sales would still grow 50% from 2021 levels, suggesting a full-year tally of around $75 billion, even if only the Fremont and Shanghai gigafactories are running at full speed. Having begun production at both Austin and Berlin facilities, chip availability remains a swing factor in ramping production. Along with continued elevated freight costs, ramp inefficiencies are expected to be gross margin headwinds in 2022. But then despite all this, Tesla still managed to post some great results. Tesla said adjusted earnings for the 3 months ending in December were pegged at $2.54 per share, up more than twofold from the same period last year and well ahead of the street consensus forecast of $2.34 per share. Tesla said on January 2nd that global deliveries for the 3 months ending in December rose 70% from last year to 308,600 units, its sixth consecutive quarterly record, taking the 2021 total to 936,172 units. The China Passenger Car Association said Tesla sold 70,847 China-made cars last month, nearly 3 times that total recorded last year and more than a third ahead of November's pace. Having a look at these results only portrays a company that is going straight to the top. Yes, there's going to be some challenges along the way yet again, but why should the stock crash? Or rather, why is Tesla stock crashing despite posting amazing results? Here's what we observed. So Tesla's stock price dropped more than 11% in the wake of Tesla's latest earnings call to investors, in which record earnings and profits were overshadowed by the impact of continuing supply chain issues on electric vehicle and product rollouts. And Tesla's stock may continue to dip after Chief Executive Elon Musk revealed on January 26 earnings call that Tesla will not produce any new vehicles in 2022. The company is instead looking to the potential for its upcoming Optimus humanoid robot revealed at the company's AI Day last year. So the dip just goes back to everything that Elon Musk said on January 26th. Now let's have a look at the highlights of the earnings call on January the 26th. Well, Tesla's earnings call saw the company report profits and revenues which performed beyond Wall Street's expectations, with a year-on-year revenue growth of 65% in the fourth quarter of 2021 and a record profit of $5.5 billion last year. The Tesla earnings call also saw the company's CEO, Elon Musk, stress the company's focus on research and development of its full self-driving software, with Musk saying that he believes Tesla's self-driving software will be responsible for the bulk of Tesla vehicle sales once perfected. But Musk disappointed investors when he revealed that the company would not be focusing on producing a much-anticipated $25,000 electric vehicle or any new cars this year. In response to one investor who asked about progress on plans for a more affordable Tesla vehicle, Musk elaborated that Tesla is not working on a $25,000 car currently. He said that the $25,000 vehicle will eventually be available, but right now the company has a lot on its plate. The shelving of the $25,000 car likely took very few industry watchers by surprise, given the current chip shortage and also given just how much of a profit margin such a model could offer Tesla. There are certainly a number of sub-$25,000 EVs on the market in China, but it has been doubted since that 2020 battery day that Tesla would want to work with margins that slim, given the fact that the base Model Y now starts at $60,190 in the U.S. Such a model would also be unlikely to use many existing Model 3 and Model Y parts and would need to be a clean sheet design. Musk indicated during the call that this would add more development costs, which would have to be recouped somehow at a time when Tesla is selling every vehicle it's produced, even after raising prices several times in 2021. In a nutshell, Tesla's share price was affected by Elon Musk's comments. That's why there was a massive sell-off after the earnings call. Basically, that's not what consumers and investors were expecting from that earnings call. As if that's not enough, the automaker is pushing back production of the electric pickup truck from late this year to the end of the first quarter of 2023. And the Cybertruck production is expected to be limited in the first quarter of 2023 before output increases. The delay is down to Tesla making changes to the Cybertruck's features and components. Well, Musk said during Tesla's fourth quarter earnings call in January last year that the first Cybertrucks would ship in 2021 if Tesla gets lucky, and he expected volume production to begin in 2022. Even before Tesla pushed the planned start of Cybertruck production from the end of 2021 into the second half of 2022, industry observers predicted that the avant-garde pickup might not have a good chance of seeing production this year. Tesla appeared to confirm the launch timeframe shift weeks ago, quietly removing the planned launch date from the Cybertruck page on its site. Nonetheless, bulls were excited about Tesla's fourth quarter results. The company beat Wall Street expectations for revenue and earnings per share. Specifically, its operating margins looked good, as you'd expect from a company that gets luxury car pricing, doesn't have to pay franchise dealers, and operates in market segments where the competition is still thin. That's all good. After years of losses, Tesla now has the scale and pricing power to deliver profits. Tesla's a no-brainer to be the world's largest automaker in a few years, powered by massive demand for its cars thanks to technology that nobody can touch. Tesla will also max out all the factories it can build, and it will deliver full self-driving years ahead of rivals. And countering 120 years of automotive history, its vehicles will actually appreciate in value thanks to that amazing tech. And despite the shelving of the $25,000 car and the Cybertruck delay, Tesla has weathered 2021 better than some other automakers, producing 930,422 vehicles and delivering 936,172 vehicles. While the Model S and the Model X experienced some parts-related delays while receiving updates inside and out, including the yoke-style steering, the Model 3 and the Model Y combined accounted for 906,032 vehicles produced and 911,208 vehicles delivered last year. That was more than impressive. Therefore, even if the stock crashed a little bit, that doesn't mean that the company is performing poorly. As a matter of fact, Tesla has got some crazy plans for 2022. The automaker is looking to become a major manufacturer of battery cells in 2022, which is new for the company. Tesla has been involved in battery cells for a long time, but it never manufactured them itself until starting production on its 4680 pilot plant in Fremont last year. In 2022, Tesla looks to expand into massive volume production of those 4680 battery cells at the Gigafactory in Texas and Gigafactory Berlin simultaneously. The automaker is still buying as many battery cells as it can from suppliers, but we believe its own cell production in 2022 is going to be a difference maker. We understand that the recent Tesla stock pricing has been a bit worrying among investors. But then look at it this way. Tesla as a company isn't performing poorly. There's a lot of room for growth and amazing innovations. So what could possibly go wrong? Let us know via the comment section. Now, it's been a super amazing session. Thanks for joining us today. Remember to like, share, and subscribe. Stay safe, and see you next time.